Hello traders, welcome back to the Forex Gig where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we are going to be exploring the range bar trading strategy, a method that can enhance your trading experience. You will learn how to set up your range bar and implement effective strategy. Stay with us until the end to gain valuable insight that can improve your trading approach and help you navigate the forex market more efficiently. Now, what are the range bar? The range bar are a unique type of chart that focuses on the price movement rather than time. Unlike traditional time-based charts, the range bar creates a new bar only when the price moves a specific amount, regardless of how long it takes. Now, this is the clear difference between the range bar and your number candlestick bar. The range bar is quite different compared to your normal Japanese candlestick pattern. So this is what it entails. As you can see in the chart, the range bar provides a clear picture of price action, filtering out the noise or minor fluctuations in price. Each bar represents a set price range, making it easier for you to identify trends and potential trading opportunities. Here are some key characteristics of the range bar, which includes consistent bar size. Every bar has a same price range from high to low. Variable time frames. The bar form based on a price movement, not a fixed price or a fixed time interval. These bars are formed based on price movement, not a fixed time interval. Reduced noise. It eliminates small price fluctuation that distorts your analysis. These are the advantages and the characteristics of the range bar. You notice how the range bar on the chart is clearly showing the market's direction towards the upside. As you can see, the clarity can help you make informed decisions about entries and exits. For traders, the range bar offers several benefits, which are the improve the trend identification, clearer support and resistance level, and more precise entries and exits. So let's see how we can trade using this strategy, the core range bar strategy. Setting up your range bar is crucial for implementing an effective range bar trading strategy. The key is to determine the optimal range size that suits your trading style and the range and the market you are trading. To set your range bar, you will need to choose a range size that captures significant price movements while filtering out noise. For forex trading, a range of 10 to 20 pips often works well for the major currency pairs. We can see if we change our range to 10, or 20, we can see it will smoothen out the market. You can see how the 10 is. Then if we check the 20, we would see there will be a clear difference. As you can see, the 20 is showing us a clearer difference. So we have to find a balance. So for an optimal setup, let's focus on the 15 range. We'll focus on the 15 pip range bar. So focusing on the 15 pips range bar, the setting strikes a balance between detailed and trend clarity, making it suitable for both intraday and swing trading. Here is some simple yet effective strategy while using this setup. For you to enter a long trade, you enter when the range bar closes above the previous bar high. You enter when a range bar closes above the previous range bar high, as we can see from example in this area. I repeat, for long trades, For long trades, you enter a long position when the range bar closes above the previous bar high, indicating an upward trend. While for a short trade, let's look for a selling opportunity. For a short trade, we will enter when the range bar closes below the previous bar low. Once it closes below the previous bar low, it indicates down pressure or downtrend. So you take a sell trade at this area. Now, how do we exit trade? If we are to enter a trade at this particular area in market, we exit our long position when the range bar closes below the previous low, suggesting potential trend reversal. So if we decide to enter at this point in the market, we would exit when we notice that price closed below the opening price, closed below the previous day bar low. If it closed below the previous day bar low, you would exit your trading opportunity. So at this area is where you decide to exit your trade. While you exit a short position when the range bar closes above the previous bar high, indicating in possible shift to the upside direction. This is where you would exit your trade. When we notice that there is a formation of a new bar closing above the previous bar high. Remember to always use a stop loss order to manage your risks. Always set your stop loss beyond the previous bar high for a short trade and below the long for a long trade. So we'll set it above the previous bar high for a short trade, while for a long trade, if we are to enter this position, we would set the stop loss the low of the long bar of the previous range bar. Set it at the low. Now let's look at some advanced techniques for this range bar trading strategy. One advanced technique for the range bar is integrating multiple time frames into your analysis. This approach allows you to gain more comprehensive view of the market and make more informed trading decisions. By using multiple time frames with the range bar, you will typically use a shorter time frame for entry and exit signals, while consulting a longer time frame for overall trend confirmation. For an example, you might want to use the 5 pip range bar. If I want to enter this trade at this place I marked, I might decide to use the 5 pip range candle to enter this position. And we can also use the 5 pip range bar chart to understand the market context. That's to analyze our charts. This is how we can get a better understanding of how to enter the trade. This is the area where we wanted to enter from, and at this area we just need to look for our entry pattern when price closes above the previous range bar candles high. You put your stop loss just below the low of the range bar candle, and you see it has given us a reduced stop loss, and we can target a higher risk to reward area. Now there are some technique we need to apply. First of all, analyze a longer time frame. We can start by analyzing the 20 pips range bar time the range bar, the 20 pips range bar, when we start by analyzing it, analyze that specific area. When we analyze that area, we switch to the shorter time frame, and when analyzing this area, remember we are not just analyzing it, we are analyzing it to get the overall market context. And as we can see that the market is in a bearish trend. You can see the market is trending towards the downside, proving to us that yes, we are only to look for selling opportunities. Then if we want to enter this trade, we quickly move into our shorter time frame, which is our 5. We can move into our 5 range bar time frame. When we move into our shorter time frame or our shorter range bar, we use this to precisely get a precise entry point within the large trend, and we have to only take trades that align with the trend direction. For this bearish trade, as we can see, when price got to that particular area on my chart, we just need to look for our entry criteria by first of all waiting for the newly formed range bar to close below. It has to close below the previous bar low. As we can see, it's closed below. You just enter your trade and put your stop loss above the high of the previous bar candle, and we target our minimum of 1:3 or 1:2, as the case may be. This is how we can capitalize on this trading strategy. This method helps you to avoid false signals and increase the probability of successful trade by ensuring you are trading in the direction of the dominant trend. As we can see from this example, trading in the direction from the higher time frame, we came into the lower time frame to execute our trade. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like, subscribe and turn on the notification bell so that you wouldn't miss out on more trading tips and strategy. Thank you for watching, and I will see you in the next video.